Yale University suggests that over 1,000 companies left Russia after they invaded Ukraine, but not Hard Rock Café, Burger King, or Fleetcore Technologies. The Atlanta-based payment services company says it has a duty to its 600 employees and millions of clients in Russia. This move has made the company's stock recession-proof since it did not disrupt its cash flow. Today's video will explore the 5 best recession-proof stocks to invest in now. Let us get started. Number 5. TransDigm Group Incorporated. TransDigm Group is a 1993 aerospace engineering company established in Cleveland, Ohio. The company designs and produces aircraft parts for manufacturers. Its clients include commercial and military aircraft builders. The aerospace industry will rise and shatter record high growth post-pandemic, especially as the newer disease outbreaks are not as globally scary as COVID proved to be. The commercial revenue growth is expected to hit 30% in 2023 and 20% in 2024. We are all witnesses to how the appetite for travel swells up in people even towards the last quarter of the year. Thus, TransDigm Group is well positioned to keep making massive gains. According to analysts, the balance sheets that TransDigm presents are solid and create an opportunity for larger projects and acquisitions. In fact, since its inception with a $10 million equity investment, the company has slowly climbed up the aerospace ladder, acquiring over 60 companies under its wings. Recently, around March 2022, TransDigm acquired Dart Aerospace, a Montreal-based helicopter mission equipment solutions company, for $360 million in cash.
A lot of money.
However, their biggest acquisition was in 2018, when they purchased a competing airplane parts manufacturer, Esterline, for $4 billion. TransDigm is forecast to make a 15.7% revenue growth this year and 15.9% next year. Hence, their mid-$500 stock is worth all the attention. As a global business magnate, the unprecedented growth expectations are not shocking. Soon, we will introduce another company with a similar growth track, but a beginning unlike what TransDigm has. We will share how a business from a garage became the most valuable in the world and could shield you from recession. Number 4. Fleetcore Technologies Incorporated. Fleetcore Technologies is a fuel card and workforce payment company. This Georgia company offers products and services to the American, Netherlands, Belgium, Slovakian, and German governments. Aside from that, they have businesses, commercial fleets, oil companies, and petroleum marketers who need their help managing and paying expenses. The company has been publicly traded since 2010, and they have spread across many countries on various continents with its best practices and hard-won acquisitions. The company reported higher earnings for its first quarter in 2020 than it was predicted to make all year. Especially now that most countries are looking for ways to streamline their expenses and eliminate ghost names from their payment systems, FleetCor and its international subsidiary, FleetCor Europe Limited, are bound to make a lot of money out of the systems. On the other hand, Fleetcore Technologies is one of the few U.S. companies that have defied the request to withdraw from the Russian market due to the country's invasion of Ukraine. Their refusal was expected to cost them business, especially with governments, but it has not. On the contrary, analysts predict an 11.4% net income growth in 2022. Number 3. Amazon.com Incorporated. The everything store, Amazon is one of the best performing growth stocks. Amazon did not always start as a digital streaming and artificial intelligence company. The business, founded in a Washington garage in 1994, has grown to become one of the world's most influential economic and cultural forces. Of course, Amazon is one of the world's most valuable brands. It constitutes the Big 5 American information technology companies in America, sharing the spotlight with Alphabet, Apple, Meta, and Microsoft. Initially, Amazon's goal was to be an online marketplace for books. However, with a little tweak to its business model, the world is at its mercy now. The company continued to make money during the pandemic, making its founder, Jeff Bezos, the wealthiest man alive and potentially the first man to make $1 trillion.
That is a big bite.
Its services are a necessity that is never going to slow down. Currently, the e-commerce and cloud services company shares are trailing behind, just like most other tech stocks. However, their long-term valuation and profitability are not shattered. Even with underperforming stocks, they recorded a 7.3% first-quarter growth. In the second quarter, their net sales amassed $121.2 billion, a 7% increase from the previous quarter. Amazon also reported a 10% increase in year-over-year earnings. The company's long-term goals include fulfilling 5% of all global e-commerce delivered by 2026. With the investment in newer logistics strategies and equipment, we anticipate a positive expansion and stock capacity. The other four information technology companies have different reasons for their growth and proof against the rising scare of a recession. Later, we will share how the leading advertising and online search company will fare should you buy their stocks. Number 2. Halliburton Corporation. The renewed urgency for oil exploration and production has driven some clean campaigners like Elon Musk to declare support for more fossil fuel production from places like Germany. Musk said, "Extremely obvious that Europe should restart dormant nuclear power plants and boost the output of those that are operational. This is critical to national and international security." Halliburton is present in over 70 countries as the second-largest hydraulic fracking company. The company has been in major controversies, but since energy prices have been driven to high levels in the past few years, it is no surprise that this corporation continues to make billions, some of which the SEC thinks it is hiding. Note, the controversy of the hidden billions has to do with EPA and some illegal activities that cannot be publicly declared. However, all stock owners receive their fair share. Halliburton has also established a subsidiary that handles its commercial construction of pipelines and chemical plants. The company intends to drill some more, with places like Dubai and Africa as its target, since the war in Ukraine has left a supply vacuum for oilfield companies. Another vacuum left unfilled is the subscribe button. Click it now, as it is extremely obvious that you're not subscribing is a critical international security issue. Number 1. Alphabet Incorporated. Alphabet is the #1 advertising and online search company. The company chose its name because they like that the alphabets represent the basics of language and communication, the key product they sell in various companies. For those who might not be familiar, Alphabet is the parent of YouTube and Google.
That is big.
That explains why your searches on Google are filled with YouTube recommendations. Alphabet is the third-largest tech company by revenue size and started as a subsidiary of Google before the reverse was announced. Alphabet has been a parent company of Google and many other companies since 2015, but its achievements have been enormous. Despite fears of reduced searches in 2022, the company's artificial intelligence and machine learning strides have kept it valuable and highly profitable. Experts call the company's stock flexible for a growth stock and keep up with all their product offerings. Ahead of the fourth quarter, experts are looking at a 15.8% revenue growth and a possibility of higher stock prices, especially after the recent 20-for-1 stock split in mid-July. Sometimes it is easier to diversify than stick to one stock. So check out our video exploring the top 6 growth ETFs to buy in 2022 now.